Do you love the idea of investing in real estate to diversify your portfolio, and you're wondering if property here in Shoreline, Washington makes good sense as an investment? Well, that all depends on your investment objectives. And as an investor myself for the last 18 years, as well as being a real estate broker here in the Shoreline, Washington area, I will tell you what I like and don't like about the idea of investing in rental homes or small multifamily properties here in the Seattle area.
This is Emily Cressy, your digitally enabled Puget Sound community advisor.
I'm Emily Cressy. I've bought over a dozen rental homes as well as put together some multi-million-dollar syndications with partners on larger apartment buildings, retail properties, and shopping center land, mostly out of state. I've looked at investing in property here in Shoreline, and like many, I expect, I wish I had done it 10 years ago. After the market tanked in 2008 would have been an especially good time, but any time 10 years ago, I'd probably be looking back on with the big thumbs up today. In general, the Seattle real estate area does great from an appreciation perspective, but does not cash flow unless you have a huge down payment. I recently looked at a 3-bedroom, 2-bath house in Shoreline, Washington that was a small, one-level, 1,200 square foot home previously used as a rental, and the price was $580,000. Yes, over $500,000 to buy a house that would rent for about $2,000 a month. Looking at a loan, if I put 25% down and had a 4% interest rate for 30 years, my mortgage payment would be $2,077, not including insurance or taxes, which would probably be another $500 a month. Plus, if you're paying property management, that would probably be $2,000 a month. Plus, there are the inevitable expenses for things like vacancy, paint, carpet, yard maintenance, new roof, all those things that will add up over time, depending on the age and condition of the property, how long the tenants stay, how much damage they do when they leave, etc. So let's add that to our budget. Let's just say $300 a month for repairs and that type of thing. It's not cheap to repair stuff here either. So from an income perspective, if you're looking for passive income and cash flow, you're not getting it. You're probably going to be spending out of pocket about $1,000 a month averaged over time just to hold on to this property. That's like $2,000 a month in income, $3,000 a month in outflow, giving you $1,000 a month negative cash flow. Plus, you would have had to put down, $145,000 for your down payment. So why would people do this? Why would they pay a 6-figure check for the privilege of losing $1,000 a month? You already know the answer, don't you? And it's appreciation. In fact, this same home that I was looking at that sold for $580,000 in December, I looked at it again in January, and the Zillow's estimate was showing that it increased $88,000 in estimated value in a month. So actually, my clients got that property, and they were pretty pumped about that. But we can't always count on that level of appreciation. We are in a little bit of a bubbly time in the market right now. But yes, that is appreciation, and that usually takes place over a longer period of time, but that's what gives people the incentive for buying investment property here in the Shoreline area. So let's look at appreciation from a little bit more conservative approach. So in 2011, Shoreline median home values were $302,000. Now there's $672,000 in 2020. This is an average according to Zillow, showing us about 8% annual appreciation. And of course, this was a strong period in our history because it included the recovery after the 2008 crash. So moving down to an even more conservative number, let's use 6% annual appreciation. If your $580,000 house appreciated at 6% a year on average for 10 years, it would be worth about $1 million at the end of that time. So what's your rate of return on that investment? Let's say you put in about $155,000, I'm including $10,000 for some closing costs, and then you had to put in $1,000 a month to cover the negative cash flow. What would that be worth? Or what would your rate of return be? And based on a few financial calculators that I worked with, it gives us approximately a 12% rate of return. And it could be more than that if you calculate things like tax savings or rent increases. It could be less if you had to do a lot of expensive repairs. So, of course, there are transactional costs you have to pay if you sell it, things like that. But overall, round it down, you're still looking at a 10% rate of return. And that is very powerful. That's a great rate of return when you're putting your money to work with you. And that is the reason that people continue to invest in Shoreline, Washington, and Seattle more generally, even though it doesn't cash flow well. So the interesting thing is that a lot of people who live here don't need the money from the property. They don't need cash flow. In fact, they're paying a lot of their income in taxes, and they're looking for ways to invest and protect and shelter their income and pay less in taxes. And historically, real estate has been a great vehicle for doing that. So if you have an interest in investing in Shoreline, Washington, or just the greater Puget Sound area in general, typically the further out from the city core you get, you will have less negative cash flow, but also a lower appreciation rate. So I actually subscribe to a number of different services, and I can help you drill down on zip codes to kind of identify the areas with the best appreciation rate and rent growth, and I'm happy to do that for you. Just, we can touch base. I'm not sure when you'll be seeing this video, years in the future, right? So can it be a good investment for you? If you're thinking of buying a property in the Shoreline area, you may be wondering if it'll turn out for you, and it really just depends on what your investment goals are. So why don't you reach out and talk to me, and we will see what the market looks like at that time. I'd be happy to pull some financials, look at rent rates and appreciation rates, all that good stuff. So the first thing to do is just get in touch, let me know what you need. I'm here to educate, I'm here to inform, I'm here to give you the information you need to make your good decision, and not a high pressure person at all. I just want you to be happy. I'm a people pleaser. And I love to negotiate, so that makes it fun. All right, thanks so much for watching. I have a couple other videos on investing in Shoreline and also investing in multifamily in the Seattle area, if that's something that you're interested in. So take a look at that and see how those numbers work. You can think about whether a single family, a duplex, or a multifamily apartment building makes the most sense for you. This is Emily Cressy with HomeProAssociates.com and HomeSmart Real Estate here in Seattle. Thanks so much for watching, and as always, I am here to serve.